YouTubers, Mike Martin's here with the Mike Martin's channel. Guys, thanks for joining the channel. Thanks for being part of the channel. Thanks for subscribing and liking. Guys, we got a massive disaster ahead. And we've been covering this for a couple of years now on the channel because it's growing. It's a growing and unreported problem. What am I talking about? Well, pensions. This is a major deal. If anyone that's working towards a pension, or anyone that is receiving a pension, or anyone that might starting to see that things are getting tight and pensions are going up. So let's take a look at this here. So here it is, guys. This is let's go back on the channel here, back in time real quick before we go into today's article. Pension crash, best and worst countries countdown. You want to see this video because it actually, I took the research to find out what countries are best to worst when it comes to pensions. And Sears pension cuts from 2 years ago. Canada's pension invested $2 billion in affordable housing in India. So what happened was Canada took pension money, invested it $2 billion in affordable housing in India. I'm not making this up. Mike in the Ninth, the death of the pension from a year ago. So pension disaster ahead. Yeah, 270,000 war veterans shortchanged on pension. That's in Canada. But unfortunately, stuff that just doesn't get out. No one sees it in the... Pensioners can't afford food. A third of Canadians have no retirement savings. So this is going to affect everybody and anybody. So here it goes, guys. This is from Strong Towns. Pay attention to this because it's really well written. This was sent to me by a viewer. Municipal pensions are now dead. We need to acknowledge that. So this is not being acknowledged, guys. So this is a major deal. There has been no official reporting yet on the health of public pension funds, that the Dow has lost a third of its value. Let me save you the suspense. Financially, they are finished. So remember, a lot of these pension funds were basically invested in the stock markets, going to the casino, right? And investing people's futures, and hopefully to quadruple and triple their money on an ever-ending upward trend on the stock market that may falter very soon. The only thing that remains is underlying obligation to pay them. And we'll see how much that is worth in the months and years to come. So there will be obligations to pay your pensions or to pay for your pension. Canada Pension Plan, you'll still have to pay for it. Are you going to get a pension? I probably won't. I understand that. And that's why I'm preparing now and doing what I need to do. That's why I'm building my house in the Philippines. And we're going to go look at some land in Portugal. And we're going to start kind of looking at other options. Because we're not going to be stuck to this. Because I'm not going to be stuck on some sort of like living homeless here. I'm sorry. I don't applaud this. In fact, I find it a tragedy on many counts. While there are fantastic stories of people rigging the system to receive extraordinary benefits, those are anomalies. Nearly everyone is getting a public pension from a local government, is receiving a modest benefit earned over a long period of service, and often sacrifices. Most of these people depend on the pensions on their daily needs. This is a tragedy. So let's go into this part because it's very important. In prior years, we could pretend that pension obligations would ultimately be paid, much like the insolvency of a country like Greece or Italy. On paper, it was obvious that there was no way to make the goods on these promises. Yet Greece and Italy, we continued to find ways to patch things together and carry on another day. But how does it work? Austerity measures, right? So these countries take loans from the World Bank, IMF, whatever you want to call it. They take these loans and then they can't pay them back. They know they can't pay them back, so they start creating this austerity thing, this austerity measures, these austerity cutbacks, and people are starving. And that's why you're seeing these that's why COVID came in at the right time, because it was just going to get out of hand with people starving and people. So COVID came in at the right time to shut it down. One of the ways that patching happened was to take an additional risk within pensions portfolio. My own state of Minnesota, which was one of the better managed public pension systems, was recently only 75% funded, assuming that an 8% annual rate of return. In a market environment, there was so-called risk-free rate of return from government bond was in the 1% range now. How would a public pension fund ever achieve 8% annual return. So this is it. There is only one way, by taking on a lot of risk. So guys, you guys know I buy swing stocks, airline, all kinds of weird oil stocks, really stuff I would never ever tell you guys to buy. I buy them on swings. I short them. I short the airlines this morning. Watch my video from yesterday. I've been doing it for years. I do okay with it because I'm willing to take the risk. But when they're taking the risk on with someone else's money, we're looking at troubles here. We're already seeing how corporations are asking for bailouts. The first of that is sure that many unprecedented moves. The Federal Reserve is stepping beyond their authority to purchase corporate bonds. It is this market, the corporate bond market, where the most fragility seems to sit, and pensions have had a huge role in that. Following the 2008 financial crisis and the bankruptcy of Detroit public employee unions, this is very important, we covered this on the channel, where Detroit went bankrupt, began pursuing states to put out more money into shoring up pension funds. Again, nothing nefarious here. It's logical and exactly what states should have done, although they should have done it decades ago. Unfortunately, these catch-up dollars were being invested at a time when interest rates were manipulated to be artificially low. Again, we know this from 2008. We understand the disparity of the banking system and now this is different. I'm predicting housing to double in a lot of parts of America, and we're going to see a 40 to 100% increase in housing in parts of America. Mark my words. I'm not kidding. Unfortunately, these catch-up dollars were being invested at a time where interest rates were manipulated and artificially low. The billions pouring in from pension funds only drove the rates down further as more and more dollars were competing for places to get a return. It was a negative feedback loop that only made the situation more desperate. Much of this money was used to purchase corporate bonds. We know this already. For example, Boeing saw its debt climb from $6 billion at the beginning of 2009 to $20 billion at the beginning of the year. Much of that was borrowed from pension funds, and pension funds chose Boeing and other corporations because of the higher return on offer. So there it is, guys. They go into Boeing and other stuff here. The second reason is that we need to free our cities from these legacy shackles. Again, invisible handcuffs. Modern day slavery. So that they can lead us out of this crisis. Our cities are at the center of innovation in this county. And I don't say that, I don't just say that in a big city context. We're going through a reset. We've long talked about about here and the strong towns. One will shrink a footprint of the cities, big and small, to something financially productive and economically viable. Our local leaders need the flexibility to innovate. Unpayable public pensions are a legacy of the centralization brought about by the suburban experiment. Freeing our local communities of this burden is the quickest way of rebuilding our economy. Stop bailing out the top and start sharing up the bottom and letting our local leaders lead us out of this crisis. Will the local leaders lead us out of this crisis? That's the big thing. Now, how is Canada doing it? Well, Canada's doing it in a different way. They're bringing in a ton of immigration. Canada believes that if they can get more people in, or more immigration in, they're looking at a couple of million. There's different levels of immigration in Canada. So there's migrant immigration, wealthy immigration. They're all in different tiers. So when you see this much people, no, there's a lot more coming on more people coming in from different tiers. Right? That's not counting the work visa people. That's not counting the people in zones of pain or zones of danger. And then that's not including the wealthy investors, which are a completely separate immigration table that does not reflect what's coming in from other countries. And you go to Canada Immigration on Canada website, it doesn't show you what you're seeing on the streets. It's a completely different what they want you to see. So Canada's doing something different. What they're doing is they're trying to ramp up immigration fast. What they're trying to do is create a consumption economy instead of a production economy. So people want to consume things like water and food and whatever. They're going to have to buy that. So they're going to have to work or live off government welfare, but they need to consume. So this way, this keeps corporations above water, but leaving the mom and pop shops to suffer and paying high taxes. So Canada's doing it, I think, the backwards way. Instead of limiting and starting to create a more of a production economy, we're creating now a instead of doing a production economy, we're creating a consumption economy. That's very dangerous. Watch the video I did about that. Let me know what you guys think. Pensions are okay. So the municipal pensions are now done. So according to this, it is done, and it's not being reported on. You're seeing it here on the Mike Martin's channel, guys. Let me know what you guys think in the comments below. Please let me know what you guys think in the comments below. This is very important because this is going to affect a lot of people, especially with me predicting housing going up 40 to 100% across America. Watch out. It's happening in Arizona right now, and it's happening in Nevada, and it's happening in Texas. Watch out, because it's coming to a city near you. Unaffordability levels, jobs down, unemployment down, everything, lockdowns, more lockdowns. Housing is going to become more and more unaffordable. Comment below, let me know. Thanks for watching, guys, and I'll look forward to reading your comments.